All right. This is a long overdue weekly outlook. I did skip last week because I did not see anything in the market, and obviously I got humbled because we went up almost 1,000 point plus. So that being said, the that was last week market. So yeah, I mean, we did we sure did followed a pattern. We exploded outside of the pattern on both indices. So ultimately, continuation pattern. We have market structure break above gamma on both. Gamma on NQ is a little lower, but still nice liquidity sweep and reversal signs from the volume. So that being said, the chances of this continuing now has increased, right? Obviously, there is a possibility of a retest of some sort inside the range, but ultimately, I feel like from the point of what the market is showing us, I mean, we had a very, very, very low amount of volume, which was probably one of the lowest in history, next to multiple other times, but at the end of the day, the following was a higher high. If you see here, the last time it happened, very, very low volume. We did correct slightly. I mean, it's very minimal, 1% or so, into an explosion. uh, at the time was a higher high, which led to all-time high. That being said, it did correct even more shortly after into a one of the biggest correction of the year. That is not my worry right now. This is not my worry right now. But a next top, which we are at 78.05, the yearly move is 8,005. We're pretty close. Even if we retest a low, we're roughly, you know, less than 3.5% from the top. It's not much, honestly. We're close, right? And I would rather see this happen as our second high into a correction retest of this range 50%, come back, equal highs lead to the downfall of late November, or beginning of September, early November into the rest of the year, February, and so on and so forth. So that being said, I am bullish as long as we keep the 4 hour 200T, which is at 29,875 for the time being. Obviously, there is ground for a shift, but I mean, as long as they don't cross, I'm not worried at all. Once they cross, yes, we are potentially going to look for some kind of retest. That being said, we've remained above 200T, and then the V-shaped reversal led to the correction to the upside. So, as far as I'm concerned, we're gonna hold this range. I mean, this is now hard support. I would argue that the top range is hard support because, and solely because, NQ has not reached the equal highs yet. So once NQ is out of his range, now I'm gonna start looking for short. For the time being, I mean, it's respected uh, every support, and it has violated every resistance that we created on the downside. So, or on the downfall rather. So far, it is just looking pretty good as far as I'm looking at. And I mean, I'm not looking for any type of significant short until we reach the yearly implied move to begin with. So that's something I'm just not gonna bet, because there's so much leverage in the system. There's so much buying. There's so much money in the current system, and also the Fed rate odds are still looking for a pause. If we're keeping those at sub 55%, we're going to be looking for a pause in September. The market will price in the pause. If we're looking for a rate hike, obviously we're going to be overextended, and then we will see some short-sighted. But until then, everything rests on the rate hikes or the rate odds in um, in the bigger picture. So as far as right now, news doesn't matter, data doesn't matter, earnings doesn't matter to me. The only thing that matters is the rate odds. Obviously, earnings are going to continue pushing the market because it's new capital coming in. It's more capital, more market cap, more capex. That's going to continue pushing this market higher and higher. The S&P 500 is pushing all-time high, while Nasdaq is slowly recovering towards all-time high. As far as I'm concerned, this area it's dragging. This is going over here. I've said that many times in the past that it would be um, that it would go to those 4-hour equal highs, and we are nearly there. So 745.36, which is the expected move for I think 12 days, something like that, 10 or 12 days. I do see some type of retracement, some type of retest, 720, 727, 7, somewhere there about in this area here. Still above 20T, but I do see a small potential retest of the range. I mean, we still haven't touched 726, 725, so there could be some type of retest. The volume is showing me that there is a potential for uh, a retest lower. I mean, when the volume breaks through, technically it's the daily, but yeah, I mean, whenever there's a spike outside of the VDMA, there's usually some reversal happening. So as far as I'm concerned, they're still looking at the highs of 745, but there could be some type of retest below so that we actually find some new buyers. Traumas are still aimed up. I'm not concerned just yet. Nothing is going to be slowing this down as far as I'm concerned. There's a very significant range of the 4-hour, so anything above the 30,000 mark to me is bullish and just a simple retest. There could be a chance of retesting 30,000 where the breaker structure happened, so keep in mind this is a resting liquidity area, and it's also a psychological value strike price. So there could be a chance that we retest there, trap some short sellers, and flip that up. So I would be concerned as well as that. But the upper weekly expected move is from Monday, which is tomorrow, which is at 30,456. So keep that in mind. The MFI has hit the top. It has rebalanced. Maybe go to the 50 range while we go down here. That's also a possibility. So keep that in mind. The Dow's at all-time high, or was, I think. Yeah, it was at all-time high. It did break out of the structure. So ultimately, I mean, if this is something like this, obviously there's more upside into a retest of the same area where we retested it, which would be around here, and then it went into a complete tangent. So again, we're looking for spikes. This is very significantly low volume, so it's the calm before the storm. Every time that happens, there is a massive trend following. So you have it right here. Like this is data that's already happened, right? I mean, you have it right here. This is not that low, but ultimately it still led to a trend. Um, Same here. It led to consolidation. This was, I believe, some type of government shutdown, I think, or some holiday. And then it led into, the trend that we are in currently. So I don't see why the same would not repeat. That being said, there's other places where that led into a retest and then more highs. So again, like this has happened many times before, leading into higher highs. So retest into higher highs is what I look for the coming week, maybe two. I would say OPex. OPex is this week, so on the 21st. The most amount of order are to expire on Friday, so be very careful. We might have a nice trend at the beginning of the week. The midweek will be consolidation, and then we are to expand or distribute on Thursday or Friday, somewhere thereabouts. So, or even the Monday after OPEX. That usually is a trending day. So uh, that is something to consider. I don't have anything else for the indices as far as I'm concerned. I am looking at gold because gold is very close to a breakout. I'm looking at the 50T on the daily time frame. If I get a closure, very nice strong closure above, it's likely to continue over to 4,700, 4,800, and then possibly, if we're very lucky, to go to 5,200. That's mo that's most likely unlikely, but doesn't matter. There's a nice target here. I didn't play this because it's in the channel. Look what it did inside the channel for a while. Now it's very close to the top, and it's also the third time it has retested. So it's either going to bust through or reverse and then come right back down to 4,000. Either way, there is an opportunity here. If we fail to break out on this leg, which would be the third leg, the retest is going to 4,000. At 4,000, there is no leg. I highly doubt we're going to continue trickling down all the way to 3,600. I would be very surprised, but it's not impossible. It is all the way to the point where November, September, November, there's going to be some type of bearish market sentiment. So, um, and I mean, that's based on data. So to me, I just would rather follow data and keep my eyes on the bonds, keep my eyes on the dollar, the VIX EQ, and play the odds, play the market odds. I'm a speculator, but at the same time, I don't play with fire. I know I will get burned. It's very simple. So I would rather wait for a breakout. If there is a breakout, I'm targeting here, 4,800, and then leaving a runner to 5,200 if we even manage to pass through this. But with the strength that this produced, and this time we actually are above 200T. Last time it kind of just followed a nice trend and held 200T. So what if the POC comes down here and now we really exited with all this consolidation because that's now support, like it's consolidation. You put a block here and that's all consolidating in the same range compared to here where it went up, it went down, went up, went down, went up, went down. Like that's consolidation but in a down trend. This is consolidation in a mean reversion type trend, which tells me that the volume also is all equal, right? Like there's no spike until it came out, and then on the spike, it still did not reverse as much. It never really broke the resistance. It actually turned resistance into support, which now is our hard support. So as long as we remain above 20T, we're going to be bullish. It's also the first time that a candle actually closed above 20T since the lower high into the first lower low. So at this point, there is a potential where the multiple candles above 20T is giving us the sauce. I mean, 20T has to cross above 50T, so there's some room there. That is what I'm watching the most at this point. So beside that, I do have. Let me pull up these charts that I had to look at. Rollings. Nice little low here. Apparently, RSI monthly RSI is currently sitting at the lowest level since the May 2000. So there's a potential for a retest of that gap over here, which is not a bad 14-15%. So there's potential for the traumas to actually stabilize here. That's one of the stock I am looking at. For the downside, I would say 34.20, just the beginning of that gap here that hasn't been filled. That's a potential for, RSI. Doesn't mean it's going to fall, but there's spikes, right? Like there's spikes of volume. So, I mean, how much more does it have to the downside is the question at this point. There is another one. Fig looks pretty decent. It's at POC. It did come out of POC. It's been attempting multiple times. This would be the third time. The fact that it is a POC and the target is $53 is kind of, I mean, even at 33 bucks, there's still quite a bunch of rooms here. That's 30%, and then you would be looking at 112%. So if you want to buy, this is a good price to buy. Lots of buyers down there as well. Mm, Duolingo is also, 20T cross 50T, 200T is right here, so 151 would be the bull bear break at this point. Any entry within this range here is good enough for a target of 180, 190, 200, somewhere there about. I mean, there's a massive gap here. You can argue it has been somewhat tapped, but it's not filled, so. I think, and maybe anything higher would kind of be, gambling, but there's liquidity here, so target the liquidity, and then maybe leave a runner to go to the major exit liquidity. I don't know how long it's going to take, but you got earnings right here, right around the corner in November. So by the end of the year, you're in and out for, uh, there's where is my there. So you're looking at 130, 140%. So might as well play the odds. I had another one. Oh yeah, that's right. SanDisk. SanDisk. You put a trend line over here, broke above. It's that simple. Channel, and it broke above. Lower low confirmed, and it's going on earnings growth. So that is new buyers, obviously at a better price. I mean, it's pretty expensive, but at the same time, it is SanDisk, it's memory. What are the chances that we, stop it back at 2000 and then come right back down to retest the 600 in the bear market? If there is even a bear market, I mean, what are the chances that the retest is down here or even at the value over here? They have earnings coming up in November as well. So it all depends on what the quarter is going to look like. But the only thing I do see is the volume. The volume is very spiky. That tells me that there is a potential for some choppy price action. It's iffy, but it's still an opportunity because it broke the channel. Another example of low volume, you have it right here on low volume. It exploded. So, I mean, you have it right there, firsthand in proof of concept. Same thing here. You get it to a retest, and then low volume explodes into higher high. So that's still something to consider. Same here. That was another big one. Yeah, I mean that's a $500 move right there. So hard support 14 14.10 ish 14.9. So if my only concern is the traumas are too close. I like when the traumas are very extended. Like the price action is very extended from the 200. There's a big bubble in the middle. That is what I really, really like to see. That tells me that the trend is strong. Now it's just they're hugging each other. So that just it's going to be very choppy, but there's a very high likelihood that we go to the top at 2000, 1950-ish, somewhere thereabouts. Don't forget there's equal highs here at the very extreme highs. Yeah, right here. There you go. So 1948 would be my target. These are not identified, but this as a target is not bad. I mean, you're looking at 15%. So it's not too bad. That's still a great pattern. This will cross 50, and then it's going to go and cross 200. 50 is going to cross 200, create a golden cross, and then probably start stalling over here. But it's going in for sure. I see the setup all the time. I've played this. This is part of my strategy. Um, Intel CEO has purchased. So that is a good sign when the CEO purchased. The CEO of Intel dropped $10 million on his own stock last week, while shares currently sits more than 25% below all-time high. They don't give a shit. Um, CEOs, when the CEO buys, it's a very good green flag. When the CEO sells, it's a very good red flag. At this point, it is Intel. There's liquidity everywhere, right? Like POC's at 108. It's not cheap, but at the same time, it's coming off the back of a 93% surprise earnings. That's not to ignore right off the rip. So there's a major resistance over here, 108, exactly where POC is. So you have the most amount of volume and liquidity at 108. If it closes above with a nice full-bodied candle and the volume on the daily remains below the 20 VDMA, we're likely to see some more upside. I mean, the 110 is right here. That 50T, once it closes above and then 20 cross 200, that's going to be a good sign that we're probably going to go into the range over here. So uh, that's still a pretty decent play over here. Somebody did brought this up to me. I like this a lot. I like this like a lot, a lot, a lot. Because equal highs, unswept, equal highs, unswept. CEO bought. Earnings are, nothing crazy, but it is decent. 7.5%, with strong earnings. So I'm assuming the next one will also be the timeline where we might go at least here and then earnings are good and then we go and fetch. There's liquidity here, like this is there. So I say this is the earnings gap. It was one. Why would they not fill it over here? I think this is all up from here. It's going to go here, consolidate, go here, consolidate, and then fill up the gap on earnings and then go and stabilize its price inside this bubble of liquidity here. So I've already placed my order. I'm buying this. and that's a prime setup of my strategy. So of my long term strategy. So that's definitely something I'm gonna be uh, keeping my eyes on. Um, this is risky, but it's not impossible for it to come back. It already has pretty decent reversal. Under over, you have your lower low, you have your first higher low into a lower high, into another double bottom. This looks like it recovered and confirms support, which is why investors came in. So that's a big sign that 154 should hold. If there is a retest, it's going to do most likely the exact same thing, consolidate inside here and then go. There's potential for higher high here if the market allows it. Keep in mind, we're still very close to 8,000. There's not much left. So, I mean, how much more gas does the market have if you're going to plan for some LTIs? If you do, I would suggest to plan for short-term capital gain because you will have to sell around November, December, and then February. So ultimately, you're not holding for an entire year, for an entire 12 months. So that's something to keep in mind here. Beside that, VIX EQ is on its way down. If it closed below 200T, that's going to be glorious. I don't know that it will, but at the same time, when it did, the market was looking really good for recovery in the meantime, leading into a spike, of course, but ultimately it's still pretty significant downside. I mean, how far can it go? 200T is the low cap, but still another few days of capital. So that would also confirm the 8,000, especially if we close under. Just FYI. VIX, same deal. I mean, VIX is the low of the year. Is it? What was this? December? Oh yeah, it is. January. Oh wow. Yeah. Okay. So we're very close to the low of the year. Um, anything below? What was this? That was no, that was still December. So we are currently below yearly lows. Yeah, 'cause that's the second. Yeah, so 1443. So we are at the lowest of the year on VIX. I can tell you right now, if like the lowest we could go is 1340. We're very close to there, but there is potential for it to chop. If we go back up, it's a good sign because then that's more room for us to go back down. I don't expect it to go in these range here, but hey, you know what? I would rather see it go up and then back down first while the traumas kind of catches up because obviously that's what usually happens is they catch up with the price. They have to catch up. So maybe consolidation of VIX somewhere in these area for the month of August and September while they cut the rate or pause or hike. If they hike, obviously we're gonna get these spikes, but ultimately that's still a good sign to for the market to continue higher. Dollar is consolidating. That's a bearish pattern. Dollar's going somewhere in this area over here. I'm pretty sure dollars would probably go around 98-ish. This is not this pattern here doesn't just form another upside. It's gonna come down, form a lower low somewhere over here, and then come back up maybe after consolidating more. But I've seen this pattern many times, and usually it just doesn't come back up right away. Um, it forms a range. I mean, here it did with a doji, but then we ended up closing above the doji, which showed that there was some more upside. Then it consolidated again into more upside. Now it's downside consolidation, downside lower low. Okay, now we're going. So I expect a lower low on the dollar. If we do get one, That's going to give a break to the market, and obviously, you know, some relief of pressure for the indices and everything else to continue going back up to the 8,000 mark. If it does lower low, very like a very small lower low, and come back up, then obviously, you know, 100 is our upper target for pressure. So if it breaks above 100, then you know there's pressure back. If it breaks below 99.4.5, then you know that the pressure is relief. And risk on, risk off, whatever you see fit. Beside that, I am waiting for Bitcoin to hit my entry. I have alerts here. I might enter a small position here because it is the first equal high, and the second one is relatively close. But my position is that which would target the equal highs once again. It's just another position after I closed the previous trade. I don't think this is the bottom. I still think there's three bottoms left. There's gonna be this current bottom coming up. There's gonna be one in October, and there's gonna be one in um, February of 2027. I'm just trading the chart. Okay, the algorithm is telling me what I need to know, and I'm just trading the chart. This is still a target that's not being hit. It's gonna get hit eventually. I still have significant belief that the bottom would be somewhere in this range here, which would also be a lower low off this target here. So somewhere below 48, 49,000. So this is gonna be where we're gonna go. I think in like by February, I would say maybe October or February. That's where we're going. That being said, that's all I have for this week. Just play it safe. It is OPex. You know, it could be way worse than last week or the week before. You don't know. Play it safe. It's August. People are on vacation, for Christ's sake. The amount of volume just showed you how many people are trading this market right now. Just play it safe.